John has $1 million saved, and he wants a $1 million house. But instead of draining his savings, he wants his money to earn that house for him. The plan is simple. Invest the full amount, wait until it grows to $2 million, and use the new million for the house while keeping the original investment untouched. The only question here is speed. How quickly can different Fidelity index funds get him there? In this video, we'll count down the top 5 Fidelity index funds, starting with the slowest and ending with the fastest. For each one, I'll show you what the fund invests in, its growth and dividend potential, and most importantly, how many years it could take John to hit $2 million. And in the end, I'll show you John's top pick, the one with the potential to turn $1 million into $2 million in just 4 years. So index funds may look simple, but they run at very different speeds. Some are built for long retirement timelines, while others are pure growth engines that swing harder and move faster. And when it comes to choosing the right index funds, it's not just about picking the biggest names or the highest returns. There's a strategy behind it. The 5 Fidelity index funds I'm showing you today are carefully selected based on a few key criteria: growth potential, dividend yield, sector performance, and long-term stability. So with that framework in place, let's put John's $1 million to the test. We'll start at number 5 and work our way to the fund that gets him to his house the fastest. John's ground rules here are simple: dividends reinvested, no extra contributions, and we'll keep taxes out of the picture based on the assumption that John is using his Roth IRA for investments. With that set, number 5 on the list is the Fidelity Freedom Index 2060, ticker symbol FDKLX. Think of this fund like setting your investments on cruise control. It's built for someone who plans to retire around the year 2060, so it starts off aggressive with lots of stocks and slowly shifts towards safer bonds as the years go by. Inside, it's packed with Fidelity's own low-cost index funds, which cover everything from giant U.S. companies to smaller firms and even global bonds. The beauty of it is that John doesn't have to constantly tweak or rebalance anything. It's designed to do that for him. Now, the catch is that because this fund mixes in bonds, it isn't a big dividend payer. Right now, the yield is only about 0.09%. The good news, though, is that dividend growth has been strong, climbing at a double-digit pace as the underlying companies keep raising their payouts. Still, the real muscle here is in the stock portion, which has averaged about 8.3% growth per year. That's not going to blow anyone's mind, but it's steady, and steady, if you give it time, can buy you a house. So based on these numbers, how much time would it take John to reach his goal of an extra $1 million? Well, if John invests $1 million today, his account is projected to be valued at about $1,083,878 after year 1. By year 5, it could be worth around $1.49 million. By year 7, about $1.75 million. In year 8, it's projected to cross $1.9 million. And finally, in year 9, his balance is expected to reach $2,066,494. At the moment he reaches the goal, the yield on the fund reads roughly 0.22% on that balance, which pays out about $2,163 for the year, or around $180 per month, while the account itself now qualifies him to wire the purchase price of his dream luxury house. He doesn't sell the original $1 million, he keeps it invested. The house is paid for by the growth. It asks John for patience, not heroics, and it proves that a diversified glide path design can still fund a real-world dream. But 9 years is a long time to stare at listings and wait, so John wonders if there's a faster way to turn patience into keys. So let's move on to number 4, the Fidelity Zero Large Cap Index Fund with the ticker symbol FNILX. This is a straightforward tracker of big American companies, the household names that dominate headlines and earnings reports. The unique twist is in the cost. The expense ratio is literally 0. That means John won't lose a single cent to management fees, so every bit of growth the fund earns will stay in his account. It works by owning the large cap slice of the U.S. market in the exact weights determined by the index, which means giants like Apple, Microsoft, and Amazon hold the heaviest seats. with an ecosystem of banks, healthcare leaders, consumer brands, and industrials filling out the bench. That means when the biggest businesses in the country grow, so does John's portfolio. It's broad, it's automatic, and it doesn't require him to pick and choose winners. The headline metrics inside this model are friendly to compounding. The dividend yield sits near 0.95%, and dividend growth has been running in the double digits at 11.72%, showing that many of these companies are paying more to their shareholders over time. The average share price appreciation comes in at around 11.17% a year, faster than the retirement-style mix we just saw, and powered mainly by the strength of those mega caps. Add in the zero-fee structure, and you have a quiet advantage that stacks up year after year. So based on these numbers, how long will it take John to reach his extra million? Well, if John invests $1 million today, after year 1, his account is projected to be valued at $1,111,200. By year 5, it's expected to reach around $1,696,000. In year 6, close to $1.89 million. And finally, in year 7, his balance is projected to cross the finish line at $2,097,904. That's the breakthrough moment. John's account has doubled, and he knows exactly what that means: his new house and 2 years faster. At that moment, the yield on the balance will be about 1.97%, producing around $19,653 in income for the year, just over $1,600 a month. Cumulative dividends reinvested into the account by then will add up to about $98,448, slowly boosting his balance without him ever lifting a finger. This path is already 2 years faster than the Freedom 2060 fund, and John isn't chasing wild risks here. He's simply letting America's biggest companies carry him forward. But even 7 years can feel like a long wait when you've already imagined yourself cooking in that dream kitchen. So the question then becomes, is there a way to get there even sooner? Well, that's where number 3 comes in. And in the end, I'll show you John's top pick, the one with the potential to turn $1 million into $2 million in just 4 years. But first, number 3 on John's list is the Fidelity 500 Index Fund with the ticker symbol FXAIX, the classic S&P 500 tracker. If John wants the heartbeat of American business wrapped into a single investment, this is it. The fund owns the 500 largest U.S. companies in their market weights, a constantly refreshed lineup that always features the nation's biggest winners near the top. We're talking Apple, Microsoft, Amazon, healthcare giants, industrial leaders, you name it, it's in there. The index works by design. Companies that perform well naturally grow into bigger portions of the portfolio, while those that lag shrink. Success earns more space, so the fund tilts towards the strongest players. Costs are razor thin, trading is automatic, and there's no manager trying to guess which stock comes next. On the numbers side, the current dividend yield is about 1.13%. Dividend growth is more modest at 2.87%, which is typical for large established companies that raise payouts slowly and focus more on growth. The primary driver here is share price growth. This index fund has averaged about 12.65% a year, and history shows that kind of compounding can turn patience into serious purchasing power. So based on these numbers, how long will it take John to reach his house goal? If John invests $1 million today, his account is projected to be valued at about $1,137,800 after year 1. By year 4, it would grow to around $1,666,830. In year 5, about $1,890,163, and then in year 6, the portfolio is projected to be valued at around $2,142,036, which means John would be able to buy his dream home 6 years from now. His original $1 million is still invested, untouched, and compounding, while the extra $1 million is sitting right there ready to cover the purchase of his dream home. At that milestone, the yield on his balance will be about 1.28%, which comes out to roughly $12,767 in annual income, or just over $1,060 a month. By then, cumulative dividends will have added up to around $72,230, all of which have been reinvested to keep his balance climbing higher. The income is a nice side note, but the real story here is that John has both his house and his $1 million still in play. What John really likes here is the blend of speed and sanity. He's not taking a narrow sector bet, he's not chasing hype, and yet in just 6 years, he's standing in the doorway of his new luxury home. Because this index spans tech, healthcare, finance, consumer brands, energy, and more, no single stock decides its future. But now John gets another idea. If 6 years is possible with the S&P 500, could there be a way to reach the house even faster, say in 5 years? That's the question that leads us to number 2, the Fidelity U.S. Sustainability Index Fund with the ticker symbol FITLX. This fund screens the U.S. market for companies that meet defined sustainability standards and then tracks them like any broad index. Rules first, emotions second. In practice, that means a portfolio heavy in modern growth leaders whose products shape daily life from software and chips to clean mobility and cloud infrastructure. It works by letting eligibility and market weight decide the lineup. So John's not trying to judge ethics himself, he's using the index's published criteria to own a consistent universe and move with it. The numbers here stand out. The dividend yield is about 1.14%, which is solid. But the real highlight is the dividend growth, roughly 13.74% over the last decade, showing that payouts have been growing fast, much quicker than the average index fund. Combine that with the average share price appreciation of around 13.91% per year, and you've got a recipe for real acceleration. So based on these numbers, how fast will John reach his dream luxury house goal? Well, if John invests $1 million today, after year 1, his account is projected to be valued at about $1,150,500. By year 3, it's expected to reach around $1,522,783. In year 4, about $1,751,873, and then in year 5, the milestone finally arrives. His balance will be valued at $2,015,395. That is the day the idea stops being some spreadsheet concept and finally becomes a closing date on buying his dream home. At that milestone, the yield on the balance will be about 1.98%, paying around $19,836 a year in dividends, which works out to roughly $1,653 every month. But John isn't finished yet. He still has one more fund to look at, the fastest growing of them all in today's market. And if the numbers hold, it could get him into that house in record time. At the number 1 spot on John's list is the Fidelity Nasdaq Composite Index Fund with the ticker symbol FNCMX. And this fund takes his investment to an entirely different dimension altogether. This fund isn't built for slow and steady, it is built for speed. It tracks the Nasdaq Composite, an index dominated by technology, communication services, and growth-oriented consumer companies. In plain language, it owns a massive slice of the innovation economy. Platform businesses, chip makers, cloud providers, and artificial intelligence leaders are all here. Apple and Microsoft sit near the top, with Nvidia, Amazon, and Meta right behind them, plus hundreds of smaller companies fighting to become tomorrow's giants. This isn't a value basket. It's a momentum engine made up of real businesses that people rely on every single day. The numbers make it clear why FNCMX earns the top spot. The dividend yield is low, about 0.59%. Dividend growth has been modest as well, about 6.87% over the last decade. But that's not why anyone looks at this fund. The real headline is price appreciation. FNCMX has averaged an 18.67% growth per year, and that kind of pace is unmatched in the investing world. So how quickly will this fund get John into his house? Well, if John invests his $1 million today after year 1, his account is projected to be valued at about $1,192,600. By year 2, around $1,421,464. In year 3, it jumps to roughly $1,693,376, and then in year 4, the screen flashes the number he's been waiting for, $2,016,384. And there it is, the breakthrough moment in just 4 years. He's doubled his money, more than 2 times faster than the number 5 index fund. And that is the door opening. He can finally call the agent, lock in his dream house, and keep every dollar of principal invested exactly where it is. At that milestone, the fund's yield on his balance will sit around 0.69%, which comes out to about $6,855 in annual income, or $571 per month. Now, this path will come with more ups and downs, and John knows that. The fund leans heavily into sectors that can surge one month and stumble the next, sometimes in the same quarter. But his eyes aren't on the daily scoreboard. They're on a 4-year finish line. And the truth is, the fastest route is rarely the smoothest one. If John can handle a bumpier ride, this fund transforms his desire for a luxury home from a distant dream into a short-term plan. 4 years of patience, and he's walking through the front door without touching his original million. These numbers are incredible, no doubt, but not everyone has $1 million to start with. There's actually an even easier way to reach a reasonable goal. Click the video on the screen to find out how to make $7,000 per month with only $20 a week.